All right, and we are live. So the market snap, a winning streak. Is the momentum finally fading here? As you can see, rates are jumping up, stocks are moving down. What is happening? And we still have earnings in focus this week. So we have a lot to talk about, and I need to sneeze. You take over.
Gesundheit.
I thought I need to sneeze. Well, anyhow, with that said, welcome to Coffee with Markus and Mark. With or without a sneeze, we shall see. It is Tuesday, October 22nd, and in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And yeah, Mark, yesterday, I mean, it almost seems the momentum here is fading a little bit, doesn't it?
It does, but we're still hanging in there a little bit. And you see that we're making those highs, pulling back, trying to make highs, pulling back. And yesterday we dipped a little bit, and then there was a sell-off in the morning. We did try to come back. And so I agree the momentum seems to be fading, but it's not rolling over yet.
Yeah, and I mean we have seen this a little bit earlier. I think it was late August. Let me just see. No, here we go. Right. So we see after the August 5th dip and the V-shaped recovery, we were going sideways for a little bit. Dipped, moved higher, moved sideways for a little bit, dipped a little bit, and I mean we have a very similar pattern here right now. So it
Yep.
seems that history repeats itself. The question is, will we have a dip and maybe a potential pullback to 4,700? Or, as I said, will the momentum just continue and we're making new all time highs?
Yeah, and I think next week's earnings are going to determine that.
Yeah, so right now in focus, definitely earnings. So let's hop over to the earnings calendar. We know that this week, I mean, we talked about it yesterday. By the end of the week, a third of the S&P 500 companies will have reported earnings. But then next week we have the Magnificent Seven. This week, Tesla reporting earnings, but then next week we see Google, we see Alphabet, we see Microsoft, we see Meta, we see Amazon, we see Apple. So I mean, with that, we have 1, 2, 3, 4, 5, 6 of the Magnificent Seven reporting earnings in the next 2 weeks.
Exactly. So that's going to be a driver. But another thing, it's going to be yields. Have you seen yields? We talked about yields. Yeah, of course you've seen the yields.
Yields, yields, yields. I mean, this is where, I mean, right now, look at this. The 10-year yield this morning jumping above 4.2. So we got to zoom out so that we see a little bit a bigger picture. So as we know, end of last year, everybody said, okay, inflation is under control. The Fed will lower interest rates. And that's what we saw going into the first quarter. However, in the first quarter, inflation was sticky, and the Fed keeps saying, okay, it will be higher for longer. And this is where interest rates start moving up again, peaking at almost 4.8%. From there, inflation seemed to be under control. We went all the way down to 3.6%. But now that the economy seems very resilient and the pressure moves off the Fed to lower interest rates, yields have crept up. And I mean, from 3.6% to 4.2 in the 10-year yield.
Yeah, and so this gets interesting because what happened after the Fed did their big cut? I mean, we're looking at 3-month highs with the 10-year yields, and I think that a lot of this has to do with a stronger economy than initially investors expected, but then also some of the recent Fed commentary and how they're basically saying, hey, we are comfortable in a rate cutting cycle, but it's not going to be super aggressive like some might hope.
Right. And I mean, this is what we see here. We have been talking about it. We have been in the camp of a 0.25% cut forever. And so right now, the probability of a 0.25% cut is almost 88%, 12% that it won't be cut. But this morning with the mastermind members, we also looked at, let's look ahead and see, okay, what happens after the November meeting? So we have the November meeting and, okay, another cut. And then it gets interesting.
Yeah, and part of this also could be tied to, well, cuts and the yields increasing could be tied to the election, right? Because there's definitely different policies uh, that are going to be enacted, whether Trump wins the presidency or Harris wins the presidency. And that's yet to be seen. So, another big thing taking place early November.
Right. And the other thing is, we hear from more and more Fed members that the 2.5%, which for the longest time was considered, there we go, 2.5% was considered the so called neutral rate. That they say, well, we don't think it's 2.5%. We do believe the neutral rate needs to be higher. And I mean, right now, it is said that it could be 2.75, even 3%. And that's another thing. So we probably don't see the low interest rates that we have been seeing before the pandemic. We might actually, stay at a higher level here. I think that's another factor that's going into this.
Sure, and so the neutral rate would be a range or policy where that borrowing costs isn't stimulating the economy or economic growth, and it's not restricting growth, right? Because the Fed can adjust um, rates to stimulate the economy or restrict it. So that's what that neutral rate is all about. And Fed member Bosick said that it's probably in the 3 to 3.5% range based on what we see recently.
Yeah, and this is why right now we see. Oops, let me go back here. As I said, I mean, this is what basically got the idea of, because when it was at 3.6%, the 10-year yield, everybody thought, oh, we have another percent to go down to the 2.5. And now,
Yep.
yeah, if it is really true that it is more to 3 to 3.5%, this neutral rate, I mean, this is where we kind of found the bottom. And so we are bouncing back here so that now we still have a percent to the downside, that we have a little bit of room
Yep.
here.
A little bit of a reality check there.
Yeah. All righty. And then, of course, we also still have earnings going on. And earnings, good news for GM, General Motors. Look at that. I mean, reviving here the automobile industry. It seems this way. And right now, I mean, they're up 8% after crushing earnings.
That's huge for them, and this is where pre-market they were up about 3%. They earned better than expected on their earnings per share, reported better, also better than expected revenue. So a win-win there. And they also increased their guidance, I think, for the year. We've talked about it. Yeah, top and bottom numbers. Top being the earnings per share, bottom being the revenue, and then that guidance, and the guidance being so key. And it was a win-win-win for General Motors.
Yeah, so GM trading at $52, levels that we haven't seen since the beginning of 2022. I mean, GM has been down as low as, where have we been? $26. So right now, since the lows that were established earlier this year, have almost double in share price.
Yep,
And then
nice
also
move.
reporting to bear earnings today, GE Aerospace reporting earnings. I mean, crushing earnings and yet moving massively lower here today.
Yeah, I mean, maybe a little bit of a buy the rumor, sell the news, because they had outstanding earnings. They had, well, actually, an earnings beat, but a revenue miss. For some reason, I thought they had a revenue beat as well. Not the case.
That's what I thought. But I mean, let me just see here. Year to date, they're up 75%. I mean, so therefore,
Full
today's
profit.
drop of 8%, I mean, brought them down from 80% to 75% or something like this. I mean, just crazy. They have been on a tear. So, yes,
They
absolutely.
they also raised their full year guidance.
Yeah. There you go. All right. Anything else? Gold. I mean, let's take a look at gold, because gold is just in the background, snickering away, making new all-time highs. Look at this. I mean, we just talked about a few weeks ago how gold crushed through $2,500 an ounce, right now already at $2,700 and on its way to $3,000 here. I mean, gold also a winner for the year. Let's see, where are we for the year? We are up 33% in gold. That is a huge move for gold.
Yeah, I just nice to see some records, but also it's known as a safe haven here. So maybe some uncertainty in the markets and geopolitically, election base. We'll have to see. But you can't argue with the move higher, and it's taking off.
Yeah. So, how do we trade all of this craziness here? Well, first of all, we have our WTF strategy, the win the fear strategy. We still have an open trade here with Tesla. No exit just yet. And let me just refresh here. And Tesla just diddling along, doesn't really want to move one way or another. Tesla probably waiting for earnings that is happening tomorrow after the bell.
Looks like it. Just kind of sitting there and hoping for a nice positive earnings move.
Yeah. And then today we had a new one, a new signal, ABBV, AbbVie Incorporated, where we got an entry signal to enter at 186.32. And we did. And it's looking good so far. What do you think about this?
Yeah, it's plugging along, doing what it's supposed to, and we'll see when that exit signal comes.
All right. All right, and then also back to our wheel positions. With our wheel positions, I mean, this morning CSIQ had a little bit of a scare at first, but shaking it off right now. Let's talk about this for a moment.
Yeah, we talked about this in our mastermind call this morning, and so the big driver here this morning, and we were down, I think 4.5%, 5% pre-market, was a city downgrade. So a move from hold to sell, I think it was, and also a target adjusted from 19 to 11, which doesn't look too hot. Now, I looked into this a little bit and reading into it, to me, it really wasn't any new news, just an analyst change, right? They basically said that they believe that for solar, has the potential to really outperform out of the solar stocks. So I think they're putting some of their weight behind First Solar as a pick. They also said that if Trump gets elected, that essentially this is what I've been saying. I believe there could be an overreaction that is a little bit temporary with solar, and they outlined some reasons why it might not be that big of a deal, but they expect a reaction that would be negative, of course. But then if Harris gets elected, it could potentially, trigger a nice rally. And I would expect the same with CSIQ. So I think that their sentiment is basically, let's get behind First Solar and let's adjust CSIQ. Seemed like it was an overreaction, at least based on where CSIQ is trading right now. I would say that that is the case.
Yeah, as I said, pre-market down 4 to 5% right now, down only 0.3%. So definitely bouncing back, shaking off the news. So we'll see how this plays out. And then we have BP. And BP today, a little bit of a bounce back, up half a percentage point.
Yep. So headed in the right direction.
Yeah, and so is Halliburton this morning, HAL, also up 0.25%, still completing the chart pattern, has found some support right here at 28 right now, doing the triple bottom like BP did. And then my little snake here, hopefully moving higher. There we go. All right, KSS Coles. I mean, Coles is just all over the place this morning, gapping higher right now, down 2.5%. However, I'm okay with this because I have already sold calls against my position at 2150, bringing
Yeah.
up my overall premium that I collected on KSS to around $17,000 so far. I'm just a few dollars shy of $17,000, 16,995 or something like this. And yeah, we'll see. I mean, I might be able to buy back the calls before Friday and then sell them again and just keep increasing the premium. Coles is just a picture perfect candidate here for the wheel strategy, nicely trading in a range. And this is why I've been able to collect so much premium on this stock.
You've done a good job of this one and trading what you see,
Yeah.
not what I think.
Yes. And then we have Merck. Merck all over the place yesterday, breaking through the 108 support level, down 2.7%. This morning, around unchanged, up 0.1%. So, Merck, now it's time for you to go back up into the range between 1012, 120 this morning, trading at 106.50. And then UPS, our little buddy. I mean, yesterday, the analyst from Barclays gave UPS, I don't know what if it was it a downgrade? It was a downgrade, I believe, right?
Yeah. Yep.
It was a downgrade, and this is where UPS yesterday lower. Right now seems to bounce back. I mean, up 0.1%, and we see that UPS this morning was trading as low as 129.77. Right now, bouncing back, trading at 131.50. So we'll see what happens here when the dust settles. Now UPS has another gap to fill, so do that first, and then let's go for the big gap.
Yep.
All right.
And I took a trade today. Do you want to talk about it today or
Oh,
tomorrow?
absolutely. Why not? Let's talk about it. AMAT.
Yeah. So AMAT, I've traded it before. I believe AMAT is solid. PE ratio around 21, which is great for tech and semis. Pays a dividend. It's a small one. Profitable for 5 years. Profitable for 5 quarters. Everything's solid with this one. Now, the only thing that I think you should be aware of is you have this correlation to the semiconductor or other semiconductor stock. And so that big drop that took place on the 15th was because of ASML earnings. And so you had an overreaction to that earnings or potentially an overreaction. And AMET also moved lower with ASML. Now, LC or LRCX is reporting earnings tomorrow. So Lam Research Corporation, they're reporting earnings, and it could be that there's a sympathy move. So a little earnings exposure. Now, AMAT doesn't report until November, so we're well a ways from AMAT earnings. But that's why I think there's a little more premium right now priced into these options. But I like the opportunity to sell the 175 put for Friday. So I did it.
So 175, which means that if on Friday afternoon after the close, AMAT Applied Materials is trading below 175, you're the proud owner of AMAT shares. And if AMAT moves higher here, it will just expire worthless and you're collecting the premium. Keep the premium, all good.
Yep.
So anyhow, new trades here. So yeah, there's a lot going on. And in a moment, we got to go back to the markets because there is some action today. And before we do this, it is this time in our show for our dad mode jokes. And after you handed it to me yesterday, I mean, let's hear, what do you have as a comeback today?
It's a medium comeback, Marcus. But so sometimes you need to lower expectations for the win.
Go for it.
I think sometimes that's an appropriate strategy in life, right? You don't come in with the highest expectations because that's a high bar to beat. You come in with low expectations to make it easy. So, in the spirit of October and Halloween, why does Dracula have a hard time keeping friends?
I don't know.
He's a real pain in the neck.
All right. That's a good one. That's okay. I'll take this. All right. Hey, how do you find Will Smith in the snow? You look for the
Wow,
Fresh Prince.
that's pretty good too.
There you go. There you go. Back to the markets. Look at this. I mean, stocks trying to make a comeback after opening much lower this morning. At first pushing higher, pushing back right now. S&P 500 trading at session highs, still down 0.25% here. Same with the Dow. So the Dow also right now trading at session highs, still down 0.15%. The Nasdaq, which was able to turn positive a little bit earlier, now pulling back from session highs, diddling along here. And the Russell today moving a little bit lower right now, just hanging in there, down 0.35%. The VIX, this morning, the VIX was moving higher. It was as high as 19, where are we? 1944. So attacking the 20 level. Right now retreating, so showing that there was a little bit of fear and uncertainty this morning, but it seems to disappear quickly from the markets right now, retreating back to 18.76.
Yeah, a little bit of fear taken out, and let's see if the S&P can turn positive and make a little bit of a move higher.
Yeah, I mean, the Nasdaq has already shown the indices that it is possible to turn positive. So let's see. Not much else on the calendar for today other than earnings, and earnings will remain in focus. So make sure that you tune in again tomorrow. So in order to make sure that you're not missing it, there's a subscribe button right underneath. Hit the little notification bell. If you enjoyed today's show, give us a like. If you feel that this is information worth sharing, there's a share button somewhere here on the page where you can share it with your friends or on social media. Would it really help us out? We would appreciate it. And